This is the Financial Survival Network. Now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Well, the market, where's it going to head? Is it going to go still higher? Are we going to find out that the more money you print, the worse the economy will do, but the better the stock market will do? Because that's what's really happening. Although supposedly we see green shoots in the economic forecast, more people going back to work, although there's still 18 million of you are collecting protracted unemployment benefits. What's going to happen next? Let's go over to Michael Pento. You know him well. You find him at pentoport.com. So Michael, we got this great economic recovery that's just ready to take off because the world is reopening. Maybe not the world, but the United States, because the political costs of staying shut down, I think, are really increasing geometrically and bordering on perhaps social unrest coming. I think that's around the world. But in the United States especially, it seems like all of a sudden the diehards are looking at, well, you know, if we don't reopen soon, we're really going to have a problem. What's your take on it all?
Well, thanks for having me on the program, Kerry. Always a pleasure to be with you. I know you have a very large and growing audience, so it's my pleasure to be with you. You know, if you listen to the Federal Reserve, they're very, 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 very convinced that inflation is transitory. You're going to hear transitory 1,000 times between now and, say, June. We just got an inflation print this morning, the recording, this is Tuesday morning. Year over year inflation is 2.6%, headline. Core rate, which is all they care about at the Fed, is 1.6% year over year. So according to the Fed, we are still, miles away from their inflation goal. But what I found interesting, parenthetically, I'll add that the Fed doesn't even look at consumer price inflation. It's not manipulated quite enough for them. So they go for the core PCE deflator, which just takes out everything that goes up. So if you like to eat meat, but grass is on sale, hey, there's no inflation. Don't worry about it. And if toilet paper is out, there's always your hand. So there's never going to be any inflation, but whatever they measure at 1.6% on the core rate is not good enough for them. Even headline, which is 0.6 percentage points above their desired level, isn't good enough for them. And I heard the Fed this week say, Richard Clarida he's the vice chair of the Fed, say, the Fed's mandate is stable prices. Well, not really, Kerry, because stable prices now mean 2.6% now. It's going to get a lot worse. Next month's CPI metric is going to be something with a 3 handle on it. But even that's not going to be good enough because don't you know all this inflation is transitory, and it very well might be. But I'll tell you what for sure is transitory is growth. You're going to see exploding growth in earnings and exploding growth in GDP in this quarter and indeed the second quarter. But after that, I think we really roll over, and then we roll over strongly in 2022. But just to wrap up that inflation argument, I mean, the inflation used to be, the Fed's mandate used to be, the goal used to be zero inflation, stable prices. So how do they engender stable prices? Well, they redefine it as some number that is so high and so long, protractedly high in nature, that it can maintain asset bubbles. And so that number is now, 2.5%, 3% for at least a year. And the way they get there, the way the Fed engenders stability in prices is by printing $7 trillion in the monetary base, which is, the base money supply is the building blocks of all the greater monetary aggregates. And they do it by keeping interest rates below 1%. So from 0 to 1% for 10 out of the last 12 years. what they've engendered is anything, Kerry, but stability. It is going to be, it has been and will continue to be, and in a more intense fashion, engender chaos in markets and in the economy.
Yeah, so market and economic chaos is coming, and that means societal chaos too, right? If you've got economic chaos, it has to spill over. The good citizens, if they don't have enough to eat, if the supply chain breaks down, then we have societal chaos, right?
Well, anytime you hollow out the middle class, eviscerate it and evaporate it, you get a country that can no longer sustain itself. It's no longer a viable nation. That's exactly what we've done. I mean, we've taken the people who own 5 houses and speculate in stocks and SPACs and American Movie Corporation and GameStop and can I say, I was going to say SHIT coin, but I won't say it because I'm sure I'll get more hate mail. But listen, I've been dead wrong on the price, actually. I admit that. But it's just another manifestation of this magnificent bubble created by, as I said, free money for 10 out of the last 12 years. But who does that benefit, Kerry? That benefits people like me, the upper 1% people, people who make a lot of money, people who have a lot of investments, people who own large homes or many homes, and people who can work from home. I mean, I'm in my office, but if I wanted to work from my home, I absolutely could. You're probably working from your house. But if you are someone who is, in the lower echelons of society as far as income distribution is concerned, say the bottom quintile, so you lost your job at your restaurant, you lost your job in your hotel, you lost your job in the leisure and hospitality sector, you don't have a lot of money in the stock market, if any, you don't have any net worth, and you don't own many homes, you probably are a renter, or if you do own a home, it's a very small one. So you're like, what prosperity are you talking about? It's been the worst of times. They have been unemployed, and they've got money from the government, but their economic stability has never been more unsure, which engenders this to civil unrest. And they see themselves falling further and further behind. I mean, could you imagine yourself being a renter and trying to buy a home? There's no inflation, Kerry, but home prices are up 12% year over year. Oh boy.
Yeah.
This is why you're having people. It's an incendiary situation. It is very volatile, and it just needs a little bit of a spark, and then boom, you've got chaos, and it's coming.
Yeah, well, incendiary, we've seen that before for sure. Like when you're describing what's happening to the middle class, that once upon a time in the 50s, when I was born, late 50s, the wife stayed home, raised the children, the husband could work in a factory and support his family, have a house, have 2 cars, and a decent lifestyle. And now those one family earners are all but gone. Well, that one person earner in the family, if the family can get jobs, that's a big if. And one thing that's instability is indicator of it is the mass migration out of the cities. The cities are becoming hollow shells, just like the middle class. And do you see a New York City coming back? I mean, how does New York City come back, really?
Well, Kerry, you have to first answer the question, are we completely going to vanquish this virus? I mean, is the pandemic going to end in June?
Yeah.
I don't think so. I mean, I really don't think so. We had actually news today from Johnson & Johnson that their shot caused 6 women, I think women between the age of 18 and 48, something around that age group, 6 of them, 6 out of 7, almost 7 million shots. So the math is 0.0000088. That is the number of people who had a blood clot from getting the Johnson & Johnson shot, which is now going to be temporarily suspended for at least a few days, in my opinion, probably come back. But I mean, why do I bring that up? Well, if you're a vaccine skeptic, you might say, you probably are saying to yourself, why in the world would they suspend the vaccine, Johnson & Johnson vaccine? Why would the CDC recommend the suspension of J&J's vaccine for a 0.000008% chance of you getting a blood clot? I hope and pray that that's only the case. There's not something else going on here, but you are going to run into a situation where the vaccine skeptics, which are about half of America, all those people that want the vaccine will have taken the vaccine. And then you just have the virus running rampant in children and throughout the entire world outside of the United States and maybe, Israel and Britain. So the chances are that in the fall, you're going to have a resurgence of perhaps even a variant or mutation that escapes most of the vaccine efficacy. And that could be a problem for not only, the country, but especially the cities. I mean, if you're going to have this idea that, well, I live in Manhattan, but I can't go out to dinner and I can't see a show and there's no entertainment, the social lifestyle is out, gone. If I walk down the street and I'm not the right persuasion, I might get injured. It's a very dangerous city. My point is, it's a very dangerous city, especially now for Asian Americans. Every day there's an attack on those people. And you have no entertainment, and it's still pretty expensive to be there. And of course, you're locked in your apartment with no lawn, no yard to roam around. So yeah. So sorry.
No ventilation either. Those old, New York City apartments, a lot of old ones pre-war, and they have horrible ventilation, unlike more modern structures today. Exactly
right. So you have that, and then even if I'm wrong about this virus not being vanquished, which I don't think I am. I wish I was wrong. I pray I'm wrong, but I don't think I am. Who's to say when is the next pandemic coming? By the way, the virus coming from Wuhan, China, has a vaccine, a Chinese vaccine that just doesn't work very well. I don't know how many people are talking about this. It's not very well promulgated, but the China vaccine for the China virus does not work very well, and that means you're going to have the largest population in the world just continuing to spin off these variants. So I mean, I'm worried about that. But if you just give me another few seconds, I just want to. Why is this so important? Is because right now we see this surge in growth and a surge in inflation. And the question is, how viable, how transitory is that going to be? Is it going to be viable or is it going to be transitory? And I really feel it's very important for investing purposes to understand that the rate of inflation is going to drop off significantly in the second half of 2021. And then 2022 could be a real problem. And it goes like this. So you're going to have, after this little ephemeral burst of inflation and growth, which lasts probably to early summer, you're going to have higher taxes, higher interest rates, higher inflation. You're going to have the announcement probably around that same time frame. So think about early summer of the end of the Fed's QE program, which would be a year from their announcement. You'll have the announcement of the taper, which is $120 billion a month of confetti that they throw at Wall Street. And now they're also not only doing that, it's also part of that is universal basic income, because from March of 2020 to March of 2021, the government borrowed $6 trillion in stimulus, which was almost all monetized by the Fed and sent out to corporations and individuals and state and local governments. So you have that monetary cliff being announced at the same time the fiscal cliff gets into the foray. You will not, I don't care what Joe Biden passes gets passed as far as infrastructure package, even if it's the entire $2.5 trillion or $2.25 trillion that he wants, which he probably won't get. But that's a 10-year program. So if you're talking about going from $6 trillion of checks handed out to people to $200 billion, that's a fiscal cliff, which will be dovetailed by a monetary cliff just about the same time in the fall, where we get reacquainted with this pandemic, which I don't think goes away, unfortunately. And again, I pray I'm wrong about that. But from what I see, there's very little chance that we completely eradicate this virus globally, which means you're going to have a lot of countries that are still in some form of lockdown. So inflation slows and growth takes a dramatic turn, summer, fall, and especially in 2022. And you have to invest, and I'm an active manager. I have an inflation, deflation, and economic cycle model. If you're going to just be constantly hedged towards, inflation investments, which is short the bond market and long banks and long commodities, base metals, and not adjust your portfolio based upon the second derivative of inflation and growth, then you're going to have a big problem. Mm-hmm. And I'll just wrap this up. I just want to say one more thing, please. There's also an elevated chance that the disinflation of 2021, second half of 2021, becomes deflation in 2022, and deflation and recession/depression. So you have to also be cognizant of that to occur.
So the risk of red flags, right? The red flags are out there, and you should always pay attention to red flags for sure. But then again, maybe the world will just decide to do like Texas and Florida and a number of other states and just say, nothing we can do about it. People will get the vaccine if they want to get it, but if you don't live your life and take the risk. I mean, I always have the saying, Michael, life is hazardous to your health.
You'll never get out of it alive.
Yeah, nobody gets out alive. And what else are we going to do here? I mean, look, the actual casualty rate from the virus is extremely low. And presumably, the immunity issue appears that if you've gotten it, your odds of getting it again are very low, less than 1% from what I've heard from the research that's been done. And, if you get it after you've gotten the vaccine, it appears that the effects will be very minor. So maybe what you've spelled out here is like a worst case scenario as far as the virus is concerned. As far as the economy, I don't know that I think the die has been cast for the U.S. economy and the global economy, and there's kind of no escaping it.
Well, to be clear, I am not as concerned about the virus because of the virus. I'm concerned about the virus more because of what governments do about the virus. I mean, it's a quixotic way of thinking and saying, okay, you're correct. Not, logically speaking, it shouldn't be ever the case that we send our children home and don't have them in school, and we should never lock down the entire country. But that's not reality. I mean, look at all the lockdowns are happening all over the world because of the virus. And if the virus makes a comeback in the fall, I mean, yeah, it's one thing to say from an investment perspective, hey, you're not going to die, don't worry about it. It's another thing to say, well, what's going to be the reaction from governments if they lock down economies again? That's part of the investment dynamic, and you can't ignore that.
Yeah, for sure. This is definitely a case of the cure being worse than the disease on many levels. We, really beyond a shadow of a doubt, it's been proven that these lockdowns are ineffectual, way more destructive to the economy and driving people into poverty. And then they can't understand why New York City's in shambles and why these states with the reactionary governors, why they're doing so badly, why their unemployment rates are double places like Florida and Texas, where it's still high here as well. I mean, it's over 4%. I think it's close to 5% in Florida, 6% in Texas, and they can't figure this stuff out. They don't understand it.
Well, you got to be careful. You don't want to ascribe too much intellectual capacity to communists and socialists. So the facts seldom get in their way. So they're going to do what they're going to do because they know they know better than you and I, Kerry. Don't you know that we need someone to take care of us, tell us what to do. Because if left on our own volition, we're just destroyed. I mean, they know what interest rate to set, and they know how much money should be printed, and they also know when and if you should be allowed out of your home.
Yeah, and they also know that Amazon abuses their workers, and therefore they all should be unionized, although the workers don't seem to go along with that idea for some reason I don't understand.
I'll tell you why it's so important that investors pay attention to what's going on now. We have the highest level of margin debt we have ever had in the history in the nominal terms, and it's a record even in terms of GDP. It's over $800 billion of margin debt, and the total market cap of equities now is an incredible 2 times. It's 200% of the underlying GDP. This has never happened before. It was about 100% in 2007 and 140% at the peak of the NASDAQ bubble. We're now at 200%. So, you better pay attention as an investor and not go to sleep with your, I have some bonds and I have some stocks, your modern portfolio theory, diversification methodology of investing, because bonds and stocks are in a unprecedented and massive bubble. And the carnage that can result from this is going to be incredible. And there's nothing the Fed can really do about it. I mean, let's just think about if we do have this chaos coming, and it's happened over and over again. I mean, let's just be honest. We're not Cassandras here calling for an event that never happens. I mean, pay attention to what happened in 2000 and in 2008 and in 2018 and in 2020. These are major crashes in the stock market, and some of them took 5 years to recover from. But even if you talk about the amount of salve that central banks can provide now globally, it's just not there anymore. There's not any room left in the interest rate spectrum to reduce borrowing costs or to increase QE or print money to have that second derivative boost of easing financial conditions. It just doesn't exist anymore. There's no room there. It's pretty much we're at zero across the globe in the developed world. So what are they going to do if we have another outbreak of the virus, or if we have a significant slowdown in growth, another recession? Lower interest rates, print money. You're already there, pal.
Yeah, they've kind of shot their load. Well, Michael, I always go back to Will Rogers when we get to this point. As he used to say, ignorance got us into this mess, and ignorance will get us out, one way or the other. And that's where we're heading. So if you're worried about this, if you're concerned, if you're an investor and you're worried about the party suddenly ending and you not being told, you have every reason to be, and you should go over to pentoport.com, connect with Michael, and restructure your portfolio accordingly so that you can survive it while others don't. In any event, send us your emails to kl@kerrylutz.com and sign up for a free newsletter at financialsurvivalnetwork.com. Michael, always a pleasure. Thanks so much for being on.
God bless, and always a pleasure to be on with you, Kerry.
The Financial Survival Network.